So in this video, we're going to take a grand tour of the data that's been given to you here in the Digital Butler project. So you should already have this Excel file. There are two tabs. We have the January checkbook and we also have the January sales. Your numbers are probably going to be a little bit different. They change every semester, but the visual and the transactions should look very similar to what you have and what you're working with. And the sales, you may have a slightly different number of transactions here, but the general layout should be similar enough that my coaching should help you be able to do your work, even though your dollar amounts won't exactly sync up with mine. So let's get started in making sense of this data. So just as an anchor point in the project, your goal is to organize the business data in useful ways in order to give the owners feedback about their business. You were given instructions to, at a minimum, create the three basic financial statements for January: the income statement, the balance sheet, and the cash flow statement. So the client hasn't asked for those financial statements, but you've been given instructions to create them because they should be useful to you. So let's look at these transactions. Here's a checkbook. These are debits and credits, or increases and decreases, to the cash account. What we need to know is what's the other side. When this cash comes in, from where did it come and how should it be recorded on the books? Same thing with the cash that's going out. And then on the sales, of course, we want to record all these sales that have occurred. We have the sales price here, and then we have they charge for shipping, and they tell you that over here in this little red and blue notes. And then the actual cost that they had to pay for shipping to the postmaster, the postage that had to be put on it, wasn't exactly what they charged the customer. Okay, so what are we going to need to do to get this started? What I'm going to do is start a new tab, and I'm going to create the basic accounting equation. So let's start with that. Accounts receivable is, the abbreviation is AR. That's inventory. And that's an abbreviation for their infomercial. So these are all the assets. So I'm going to set that up there. And the assets, of course, have to equal the liabilities, right? AP is accounts payable. We have a loan from Cliff, and we also owe Cliff for the price of the infomercial that he put on his MasterCard. And we will be owing Cliff 1 month of interest. And then the equity is, since this is just a partnership or a sole proprietor, we're not entirely sure. It's not a corporation, so we've got just a capital account. So I have my accounting equation set up. The liabilities and equity, those four cells, have to equal the sum of the asset cells over here. So I'm always going to keep in mind that whatever I put over here has to equal whatever is happening over here. Alright, so I'm going to go and just take a screenshot of the checkbook so I don't have to click back and forth. Alright, so I've got a mini version of that checkbook. I'm actually not going to type anything in here. I'm actually going to be pointing to other places in the spreadsheet in order to populate the amounts. But this just is a nice little cheat sheet so I can remember what's on the other page. Alright, let's just start with the first one. So the first one, the date, point over here to the checkbook. Cash is going out. It's a credit. I'm going to point over here. I'm not going to hard code as you saw in the prior video. And that is a loan from Cliff. So that's getting a loan. Excuse me, cash is going up. So we show cash coming in, and we have a liability of the same amount. We have to repay Cliff. So this is getting a loan. Okay, next transaction. This is a decrease. We are buying inventory. So one asset's going up, inventory, and one asset is going down, cash. And so we're still in balance. This is a 0 on this side, and this is a 0 on the other side of the equation. Okay, next. Cash going down. And that is prepaid postage. Another situation where one asset went down and a different asset went up. Okay, the deposit. So cash is going down by the 130, and we now have a due from landlord, basically the deposit that they'll have to repay if we leave the premise in good shape. Another situation where one asset went down and another one went up. Okay, now we're going to pay rent. So cash is going down, and we have rent expense, which will reduce capital. Ready for the next transaction. This is an increase to cash. We're depositing money from customers. So we must have sold something that we haven't recorded the sales yet. We would cancel what they owed us from the sales. Might make more sense for us to put January sales in there before we start collecting, so let's do that. What did we sell? So let's go on over here to the sales tab. Let's go down to the bottom and let's add up January's sales. So I hit the epsilon key here, and it's totaling all the way up to G2, which is what I want. So that's the total amount sold, and then this is the shipping that I have charged my customers. So the total that I expect to collect are these two numbers added together. This number over here is the amount of postage that was used up on the postage meter. So I will reduce the prepaid postage at the end of the month for that. Okay, let's go on back over here to our accounting equation and let's record what we need to collect. We need to collect that number and that number. And the other side of that is revenue. That's the sales for the month. Now collecting some of that 12,000 makes a little bit more sense. Okay, let's do the next line. We're going to collect some more. Great. So now, as we collect part of the 12,000, we reduce what the customer owes us, accounts receivable, and record the cash. We don't record the sale again. We recorded the sale up here when we kept track of all the items that were provided to customers, and then they're paying us over time. All right, let's do the next one. Now we're going to buy some more inventory. So in that one asset goes down and another asset goes up. We paid for lunch, so that's some kind of entertainment expense or food expense. All right, next one. Bell South, so that's the phone bill for the month. Cash is going down, and we have phone expense for the month. Let's do the next one. We're going to pay for some supplies. All right, let's collect on the 23rd here. So the customers don't owe us what they've just paid us. All right, moving down the line here. More Chinese food. Move that on out of the way. Okay, so we're going to buy some more parts. We're going to buy some things for the accounting team. So I guess that's our accounting fees. All right. Final collections for the month. Looks like we have 2 deposits on the same day. Boy, those dollar amounts look awfully similar, don't they? I have to squint to see the difference. Okay, so we have all the activity, at least we think we do, for cash. So I'm going to put a total down here and just verify that we're matching cash. I'm leaving some spaces because I know we have some non-cash transactions to record. So does this match our checkbook? So I missed 3 lines. You probably picked up on that. And I was concentrating on talking to you while I was working. So let's fix those lines so that we balance back to cash. Purchase of inventory. So you can see the pattern here since we're doing this several times. One more transaction and then I should balance back to cash. There we go. Now it works. So that's because the column's not quite big enough. I'm just going to come up here and double click so that I can see the full contents. Okay. I'm going to stop at this point and pick up on the next video on how to do the non-cash transactions for the month. And then once we have the non-cash transactions for the month, we will then use this accounting equation grid to create the financial statements. And then we'll be ready to start thinking about giving business advice.